If you're a day trader with over $10,000 in your portfolio and you're looking for a quick 15% strategy and you're available from 9 a.m. till 12 p.m. EST, I want you to take this strategy. I want you to use it. For context, my name is Andrew, and over the past 15 months, I've backtested over 3,979 trades for one reason and one reason only, because I want to know what truly has a direct correlation to win rate based off of historical data. I don't like trading with intuition because I work hard for my money. I got a family. I'm sure you do too. And by filtering through all of these variables up here at the top, I'm able to find very specific edges. So let's dive into this exact setup. This is where it'd be nice for you to get a paper and pen and actually write this down. From 9 a.m. all the way till 12 p.m. EST, excluding 10:01 to 10:30. Must confirm breakout during these time frames. The second part is going to be free float. Free float are the amount of available shares for retail traders like me and you to trade. You can find this on your broker. Next part is going to be the market cap. What works best for this strategy if the market cap of the company is below 50 million. Now that you have those variables, let me go over the current stats. Out of the past 123 trades, 86 of them have run for 15% with a 69% win rate. Now, I will say over the past week, as the market has been pulling back, this strategy has not worked as well, and I have taken a couple losses. So I do suspect that this win rate is going to come down to around 67% with the previous week. But overall, for the past 12 months, it's been pretty damn consistent, and you can see the equity curve down here at the bottom with 75 green days and 36 red days overall, with a 67% chance to be actually green. The second part that I want to go over here is the actual take profit. For this specific strategy, the winner for the past 15 months has been 15%, but if I type in 16% right here, you actually be able to see that 16% is slightly beating out 15% as it loads up here. You can see the net profit would be 56,400, position size of $10,000 on every single trade. That's assuming that you execute it perfectly. And again, past performance is not a promise of future results or anything like that. I don't know if this setup is going to perform the same way over the next 12 months. I can only give you the historical data. So now let's actually jump into an example. So right here on the tracker, you'll be able to see the last recorded breakout that I have right here, which is July 21st, 2026. The ticker is CPHI, the breakout level 107, and the time the stock broke out is at 9:50. So I'm going to jump over to Webull here and actually show you how to pull this up. So I already have it pulled up, but all you have to do is go to CPHI, type that in for the ticker, right click on the chart, go to the go to option right here, click on 721, click on 950, click on OK, and it's going to bring up the chart here, and I'm super zoomed in. The first thing I need you to do to be able to go out here and replicate this and follow this strategy yourself is you got to get really good at setting breakout levels, which is just really just a level of resistance, but I have very specific rules for how I set those levels. And one of the very specific rules that I have is that when we get a breakout, the level of resistance must be higher than 17% above the previous close. So the previous close on this stock was right here at around 91 cents. So if I measure out the distance from 91 cents up to this level of resistance where it got rejected, you'll be able to see right here in the gray box that this is at 17.5%, which put it just above the threshold for me to count that as a legit breakout level. And then on the 5-minute time frame, the next thing you'll see is that the 5-minute candle right here closed above 107. And at what time did it do that? It broke out right here at 9:50 a.m. As this 5-minute candle closes above our breakout level of 107, that's when I get confirmation that there's a breakout. And here's one of the big breakthroughs that I had. One of the things that I started tracking is as this 5-minute candle is confirming breakout, what is the 1-minute time frame doing? So remember, the 5-minute candle closed at 9:50. So why don't we switch over to the 1-minute time frame? Let's go back to the exact same date, go to the 9:50, and then we'll go here, we'll zoom all the way in, and you'll be able to see that the last 1-minute candle at 9:50 closed green. So that's the first confirmation that must happen in order for me to take this trade. And then the real true confirmation for me to hit the buy button is this next 1-minute candle also must close green as well. As soon as that next 1-minute candle closes green, I enter a position right at the close when there's 1 second left on that candle. The best take profit for this strategy is 16%. I've also tested to see where the best place to put the stop loss. You can get away with a 17% stop loss, and it's very profitable for this strategy. However, what's been a little bit more consistent and has taken the place of the 17% stop loss is a 20% stop loss. And I know the risk is greater than the reward on this trade, but the thing is we're trading these momentum stocks, and a lot of times they have very volatile moves, and they'll make a quick wick down, and then after that they'll bounce. So what I found is having the bigger stop loss actually will improve your win rate. Guys, I'm not promising that you're going to get these results, but here's an example of me actually live trading this with my one-on-one students in real time. Now remember that market cap does not update in pre-market, but market cap increases with the price increase. So this market cap is really up by over 87% right now, which if I just do simple math, if we double 13, that's 26. So it's close to around $25 million market cap right now, which is below 50 million, which is a check. That's good. We also want to look at the free float. Free float, 2.3 million. So below 50 million is good. Below 10 million is great. So free float is really good. And again, free float is just the amount of shares out on the market for retail traders like me and you that to trade. We made the initial move up. We got the pullback. We got the first red candle. And now that we've got the first red candle, that level is now an established breakout level. Breakout level just means that that is the level that I want to see a 5-minute candle push and close above. So at this point in time, what I like to do is zoom into the 1-minute time frame. So to close above this level, this current 1-minute candle would obviously have to be green, which would be the first thing that I would have to see in order to trade this stock. I need the 1-minute time frame to be trending green. That way I can get the momentum. After backtesting, this has a massive direct correlation to win rate. Can we get a last second push here? Can we get a push? We did. So we got a push. So that first 1-minute candle just closed above. So what I need now, guys, is I need this current 1-minute candle to close green. If it closes green, I will enter at the candle close here. We're currently red, turning green. All right, so it looks like I'm probably going to take this trade here. Close. All right, I'm in. I got filled at 489. I'm looking to take profits at 564. My mental stop loss is going to be down at 393. For all my one-on-one students who are a little bit more advanced and know exactly what I'm talking about, I'm going to set a limit order, a sell limit order at 564. That way, if it wicks up there, it'll go ahead and take profits for me. Another thing that I track is after I've entered a trade, after we get the 1-minute time frames trending green, the next thing that I track is what happens to the 5-minute candle. If this 5-minute candle closes green, our win rate does increase. All right, EFOI, again, the level that I want to see it hit is going to be 563. I know historically speaking, I'm out, guys. I'm out. That just hit take profit for me.